Guys, we saw the inflation-related CPI data today come in hotter than expected, and it's looking more likely now that the Fed will stay higher for longer and not cut interest rates as quickly as expected in 2024. So how can we, as wise investors, capitalize on the higher for longer trends and with a strong top-end US consumer? Well, we've got you covered with this list that we're calling the top 5 super consumer stocks. Stay tuned for ideas to add to your portfolio shopping list. This list was distilled with key insights and understanding to identify those companies that are best positioned to take advantage of these trends, with a bottoms-up approach of a well-heeled and more insulated consumer base. Here are the top 5 consumer discretionary stocks that stand out in this environment. First on the list is Amazon, with the ticker AMZN. Amazon's wide adoption across all consumer segments, especially with home delivery of goods, Amazon Prime, and the impressive tech divisions for AWS, makes it a strong contender. Despite economic headwinds, Amazon is a solution provider that continues to create satisfied and repeat customers. It challenges the inflation narrative of supply constraints with its globally efficient delivery network. Although it is one of the key and widely held mega-cap stocks, individual ownership may make sense for any individual who uses Amazon consistently and won't likely stop because it's simply so convenient. Next up is Home Depot, with the ticker HD. While the housing-related builder boom and its related contractor suppliers may soften a little, we think Home Depot is potentially on the verge of a secondary supercycle. As a large number of homeowners with low mortgages are locked into their homes, and over time, they will need to improve, maintain, update, and renovate. The supercycle theme is what we're calling the homesteader wave. In the old days, people set up and stayed in one place. The pandemic wave that triggered many people to buy homes are now likely stuck, so to speak, due to divinely low mortgage payments. And although it's not widely discussed in financial press, a speculative idea we're suggesting is that even if or when these low-rate homeowners do decide to move, they may do so by simply renting their home to someone else and buying a new home. Their landlord-to-be status will be motivated based on never giving up their 3% mortgage, although they'll have to invest in upkeep of their rental. Home Depot stands to benefit from this trend. Costco, with the ticker COST, is another stock worth considering. Despite a higher than average multiple or PE, the high-income consumer base that frequents Costco makes it a stealth luxury play on investing. With strong real estate holdings in top zip codes and counties based on average income of shoppers, Costco has a solid footing in the marketplace. The same well-heeled homeowners with their 3% mortgages and all-time high stock portfolios are now buying their gold bars at Costco. Make no mistake about it, this company has a well-deserved reputation for being frequented by the Mercedes-Benz treasure hunter crowd. If you've made it this far, consider giving us a like and subscribe, and comment below to support our work of helping wise investors. We really appreciate it. Coming in fourth is TJ Maxx, ticker TJX. With a range of luxury discount treasure hunt brands, TJ Maxx caters to the luxury value-conscious shopper. As apparel becomes more of a staple along with finding value, TJ Maxx's deep distribution networks and local store footprint make it a reliable and long-term pick. While some competitors like Nordstrom Rack may have a bit more pizzazz, TJ Maxx is more of a pure-play discount distributor and doesn't need an outlet mall to pull in an especially discerning female shopper for apparel for the whole family. Finally, we have home builder Toll Brothers, ticker Toll. Catering to the upscale buyer with average prices well above the typical trade-up market, Toll Brothers has a robust pipeline of well-off aging boomers in high-cost markets from the West, like California, and east to New York, and in between, looking nationwide to trade up to retirement luxury living. Despite higher for longer rates, Toll Brothers is likely to continue to prosper due to lower mortgage utilization by their wealthier buyers, and high credit quality, and high down payment percentages of the ones who do. In summary, the top 5 consumer discretionary stocks to consider in the current market environment are Amazon, Home Depot, Costco, TJ Maxx, and Toll Brothers. These companies are well positioned to capitalize on the higher for longer trends and a strong top-end consumer. Always remember to conduct your own research and consider your financial situation and investment goals before making any investment decisions.